Today, we are going to talk about John Hancock, which is a plan offered by USAA, and really any agent can quote this type of policy. It's got some pros and some cons.
It basically combines life insurance and long-term care.
Are you more interested or more concerned about protecting your long-term care risk, or are you more concerned about death benefit?
It's more life insurance focused and less long-term care. You know your financial situation better than anybody. Like anything, there's pros and cons, but that's kind of our secret sauce is objectivity. We'll go over the pros and cons of each.
We help people compare these plans. All right, today we are going to talk about John Hancock, which is a plan offered by USAA, and really any agent can quote this type of policy, the long-term care plan. In a nutshell, it's got some pros and some cons when we're comparing it with other hybrid long-term care options, and that's what we'll talk about today. I'm here with my cousin over in Atlanta, Derek Wilkins. How's it going, Derek?
Hey, Drew, I'm good. Good. How are you guys doing today?
Great, great. So we wanted to do an update. We've been talking kind of in the green room a little bit on the John Hancock long-term care options that specifically what USAA tends to offer a lot. Obviously check with USAA for their offerings directly. We wanted to give our opinion because we help people evaluate this all the time.
Yeah, so John Hancock and USAA, they have a program that it basically combines life insurance and long-term care. So we call it hybrid long-term care insurance. It's more life insurance focused and less long-term care. So Drew, tell the viewers what is the difference between like a more life insurance heavy plan than like a traditional hybrid long-term care plan?
Yeah, so really, when we were kind of like brainstorming for this, one of the things we said was, are you more interested or more concerned about protecting your long-term care risk, or are you more concerned about death benefit? Um, and depending on the answer to that question is whether you should take a pathway towards one plan or another. This particular plan, as you said, de-emphasizes the long-term care because it basically pays your death benefit out a little bit early for long-term care benefits. Whereas a hybrid plan, to answer your question, a hybrid plan that we sell more of, significantly more of, we sell everything, but we sell a lot more of the plans that have a big leverage factor. In other words, a much larger long-term care benefit and a little bit less death benefit because there's better ways to do a death benefit. Most people aren't really interested in buying a whole lot of life insurance when they're in their 60s.
Yeah, so exactly. So that's kind of the sweet spot because I mean we're a broker. We work with all these companies. USAA, they use John Hancock, their protection universal life. We offer it as well. And so the cases that I've used that in the past where it's the client would have a slight concern about long-term care, needing long-term care, and the bigger concern was they want to leave like a bigger lump sum to the family in the form of life insurance. So in that case, you know, that's where it's appropriate. But for most part, when people as they age, it's as their mortgage is paid off, the kids are self-sufficient. It's almost like a seesaw. Their life insurance need goes down on one end, but on the other end, their long-term care need goes up. And so, the USAA John Hancock long-term care plan, like you said, it's more life insurance focused and less long-term care. And some real numbers to that, if somebody put 100K in there, just kind of roughly speaking, that's going to give them about a $300,000 life or long-term care account. Now, there is a but in there. The John Hancock UL product comes with a rate guarantee period. So that means anywhere from 15 to 25 years, your rates could expire and you might have to dump more money in there if John Hancock has not been hitting their internal rate of return, which right now is 4.65. So if interest rates go down and they don't hit that 4.65, when you're 85 years old, you might have to dump a significant amount more money into the plan.
Yeah. So we actually looked at some quotes over the years, and that rate's already coming down. We're making this video late 2025, early 2026. Interest rates have come down a little bit. And so the impact of that is, you got to put on your economist hat for a second here. And we're both, have economics degrees. If long-term interest rates come down, you're going to see these policies need potentially additional funding in the future. They can also adjust their charges on the policy. So not just the rate of return, but the charges. So there's a little bit of like we can't say with certainty that this policy will be exactly, the way it looks on the illustration. Unless we look at the guaranteed page, we can safely say that that will happen. Now, back to your numbers, and we're going to put some slides up on the screen here. So they put a $100,000 premium into this plan. They get roughly 300,000. This is for a 60-year-old female we ran the numbers on, but I think we had some other options that were similar. So you get like basically a 3-to-1 leverage ratio. You put in 100, you're going to get 300 either through death benefit or long-term care. Let's flip the script and say they go with a hybrid long-term care plan that's more LTC focused, like Nationwide, New York Life, Bright House, Lincoln, Securian. There's a bunch of companies that offer this type of plan. They're going to have $900,000 in long-term care benefits when they are 80 years old. So the difference in long-term care is like 3-to-1. And the like you say, there's trade-offs with everything. Well, how are they giving 3 times more long-term care with these other types of plans? Well, the death benefit's half as much. It's like 150 instead of 300K. So, you have to ask yourself which dollars are more important for you in retirement is kind of the way you need to look at this.
Yeah, and like I said, we've had clients who we've used the John Hancock Universal Life Protection product with, and those are the clients where life insurance is more important to you, and that's kind of what we let you guide. We'll give you our advice, but you're the ultimate decision maker because you know your financial situation better than anybody. And if life insurance is more important, then maybe you do want to go with one of these universal life products. But for the most part, people who are planning for long-term care needs the leverage that you get on the long-term care way outweighs the small increase in the life insurance. There's a couple other benefits with going with traditional hybrid long-term care plans. One is a lot of the hybrid plans are cash indemnity. That means once the claim is triggered, they just send you the cash. You can spend it however you want. You don't have to account for receipts and whatnot. The John Hancock plan is a reimbursement plan. That means you pay the expense, pay the home health care aide, submit the receipt, they pay you back, and you have to use licensed caregivers. There's also a 90-day waiting period with the John Hancock long-term care hybrid plan, which means you got to pay the first 90 days. There's several hybrid long-term care plans that don't have a waiting period. So like anything, there's pros and cons, but that's kind of our secret sauce is objectivity. We'll go over the pros and cons of each.
Yeah, and if you do like that concept that John Hancock offers, you're okay with the 90-day waiting period, you're okay with the reimbursement. There are other companies that I can't help it. It kind of triggers me, like when we're just looking at one plan. There are other companies that offer that same platform, like Prudential and others, that we can run comparisons on. So whether you like the concept or want to look at something that's a little more long-term care heavy, what we do, we're independent agents. We work with all the major insurers. We help people compare these plans. Whether it's just with a simple phone call or a form on our website, you can reach out to us and we can, spitball ideas anytime.
Yeah, well, that kind of wraps it up today. And if you want to learn more and actually talk with Drew or myself, call us. The phone number, we'll put it in the show notes. But you can also go to our website, ltctree.com/YouTube. And if you want to just put your name and a number there, we can reach out to you when we get a few minutes. But either way, we really do appreciate you watching our video today. And we do these videos weekly or bi-weekly at worst. And we're constantly putting up topics on various kind of retirement planning. And we're going to be doing more later on this week.
Yep. So in summary, if you are looking at the USAA or the John Hancock long-term care plan, there may be some options that provide more long-term care with a little less death benefit. Reach out to us, like Derek said, and thanks for watching.
All right. See you guys.